Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Master along with Tim Stanovic in our Interactive Broker Studio. We're going to get back to talking about the generic pharmaceutical business, to be exact, with Teva's president and CEO, Kåre Schultz. We'll get back to him in just a moment.
Yeah, also going to talk about the sustainability-linked bond offering, a massive one, and why those have been on a tear this year.
Yeah, they really have been. A lot of money going into anything that's connected to sustainability. All right, first up, though, let's get back to your top business stories and Charlie Pellet.
Hi, thank you very much. Lots going on. You might say we're a little bit busy. Earnings season, but we love it. Here's what's going on right to the numbers. Mixed day on Wall Street. The Dow now lower, 93 points. Leg lower right now, down 0.3%. Fast-moving markets, S&P now up 4, higher by 0.1%. Choppy trading day, but again, off-session highs. We've got NASDAQ up 109, up 0.7%. Your NASDAQ 100 index at a record up 1%. These gains, though, far from broad-based. Russell 2000 down 1.1%. Dow Transport slumping by 0.7%. But the broader equity market mixed amid a slew of earnings reports, a decline in commodity prices, and renewed concerns about economic growth. Crude among the commodities lower today. West Texas Intermediate down 2.5%, 82.53 a barrel. Spot gold up 0.3%, 17.98 the ounce. 10-year yield 1.52%. Bitcoin now down by 5%, 58,987. Well, as for the broader market outlook, Sarah Malik is Chief Investment Officer for Global Equities at Nuveen.
We think markets are going to become more challenged going forward. We have a couple of rate hikes priced in by the markets. The yield curve is flattening. So what we have to rely on is hard economic data. And as long as that translates to mid-single-digit earnings growth, which is what we expect, that should be supportive for the markets. But given where valuations of the markets are right now, we think it's more likely the market takes a breather from here, because for the rest of 2021, drama in D.C., hard to find that catalyst to take the markets higher, because we think we just saw two main ones this.
Microsoft shares after earnings up 4.9%. Alphabet, parent of Google, up 6.1%. eBay reports after the bell today down 0.7%. Twitter's legal battle to keep Donald Trump off the social media platform for inciting the January 6th Capitol riot is being moved from Florida to a federal court in California over the former president's objections. After earnings, Twitter shares plunging now by 9.4%. Recapping stocks mixed, S&P up 3, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest, Teva President and CEO Kåre Schultz, still with us on the phone from Parsippany, New Jersey. Hey, Kåre, a few things we want to bounce around off of you and just get to that I feel like are outlying issues, if you will, and curious about your view. First of all, earlier this month, you guys had recalled more than 2.5 million vials of drugs that the company that you guys had said may not be sterile. And there were U.S. inspectors that discovered this at a Teva production plant in California. I think they were medicine used to help treat cancer. They may have contained mold contamination. What's the update on that?
Yeah, so first of all, just to correct a few facts, we actually ourselves discovered some environmental issues related to mold. It was not the case that the products were not sterile. And we did recalls in the first quarter and the second quarter. And that's something we did based on our own internal investigations. And then following that, we had an FDA inspection, which resulted in a 483. And we are now addressing all the points raised in the 483, working together with FDA to secure that we get all the remediation done. And the factory is still in operation from the point of view we're still packaging and shipping products, but in the sterile area, in order to make sure that the environment is in complete and perfect compliance, we have stopped manufacturing for a shorter period where we're doing remediation, and we expect to be back manufacturing here at the end of the quarter, and this is all done in close collaboration with FDA.
How far along are you in working out all of those issues? How long do you think you will be collaborating with the FDA?
So some of these issues takes, a shorter period to correct. Other issues take a longer period. So typically when you have a situation like this, before you reach a complete remediation, it can be 1 to 2 years, but that doesn't mean that you can't be manufacturing and supplying your patients in the meantime.
What's the cost to the company because of this, the downtime as well as the fixes?
So it's relatively insignificant. It's not a major manufacturing site. It's not a major part of our revenues. So the consequences are basically included in our accounting for the third quarter.
Hey, and also one of the things that we've been watching, and I want to get you to weigh in on, is Novartis considering selling or spinning off its Sandoz generic drug business. How do you view that? Is that a good thing? Is it something that you're interested in purchasing?
So I view it as something, and of course you have to ask them why they're doing it. I wouldn't know that. But if I just look at it from the outside, it reminds me of what Pfizer did with their Upjohn unit. They basically had some generic and old products that they spun out and put together with Mylan into Viatris. And I think it looks like Novartis doing the same. And one of the, you could say, arguments you've heard is that, of course, you get better ratios, you get better growth ratios. If you have an old business that you spin off and you keep your innovative specialty business, then your numbers from that point of view will look better, and that might be the motivation. In terms of us thinking about Sandoz, we are not really looking into it. We don't have any appetite for any major acquisition simply due to the fact that we are focusing on reducing our debt.
Right.
So it's not something we would be interested in.
Hey, Cor, I want to get your thoughts on why you're planning the $4 billion in ESG bonds tied to medicine access. Why go the ESG route with these bonds?
Well, basically because we believe in doing good for the environment and doing good for patients. That's really the foundation of the company. We are the world's largest manufacturer of medicine. We sell more medicine per day than anybody else in the world. And we believe in doing good while doing that. So what we've decided to do is to issue these $4 billion in bonds. And just to explain that, we issue $4 billion in bonds 5, 7, 8 years out. Right. And we use all that money to repay debt, which is, 1, 2, 3, 4 years out. So it's really a question of moving some of the debt. And the reason why we do it is because our debt repayments in some of the coming years, for instance, in 23, is more than the $2 billion plus cash flow we make every year. So that's just to explain why we are making a bond offering. We basically sell bonds in order to buy some other bonds so that we change the timing of the debt. The reason why we do sustainability-linked bonds is basically because we can do it and because it's good for society. So what we do on the access side is really we commit to ensuring access to essential medicines in low and middle income countries. Now, essential medicines, that's a list of medicines that WHO has defined that are essential to healthcare.
Hey, Cord, just got about 20 seconds here. What are the metrics, though, and transparency that you will use to make sure that debt is ESG and working to meet your intended goals? Just quickly.
Yeah, so it's already certified by external bodies that, are independent and that do this. The Independent Access to Medicine Foundation, the ISS ESG people. So they look at it and say, this makes sense, this is bona fide, this is something that will be measured and reported and that will help societies around the world. And the actual KPIs, one is to get more essential medicines registered in more of these low and middle income countries.
Okay. We got to run, unfortunately, Cor. Hopefully you'll come back and let us know how that's going. Cor Schultz, President and CEO at Teva Pharmaceuticals, on the phone in New Jersey.
Well, let's head to Washington, D.C. for a check of latest world and national news. Hey there, Nance.
Tim, a plan to tax billionaires offered by Senate Democrats today is already coming under fire from within their ranks. West Virginia Senator Joe Manchin calls the idea divisive. He told reporters he does not like the connotation that they're targeting different people he says contribute to society and create a lot of jobs. Congressional Democrats are urging party leaders to end the Senate filibuster and pass the John Lewis Voting Rights Act. Congressman Lloyd Doggett of Texas says they need the White House to step in.
We need the president to fully engage with those senators who've been resisting making an exception. We have to make an exception for the future of democracy.
Doggett says Republicans are afraid if restrictions are not placed on voting, they'll lose. Investigators say there was some complacency in how weapons were handled on a movie set where Alec Baldwin accidentally shot and killed a cinematographer and wounded the director. Sheriff Adon Mendoza says ammunition rounds found on the set include a mix of blanks, dummy rounds, and possibly even live rounds.
This investigation is active, so I won't comment on how they got there, but we suspect that they are there. That will be it will be determined when testing is done by the crime lab in reference to whether or not they are officially live rounds or not.
Mendoza says criminal charges have not been filed, but they are not out of the question. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons, Carol Messer, Tim Stanovic here on It's Wednesday.
It is. Does it seem like it?
Feels like Wednesday of 2024.
That's true.
Okay, so a couple stories. First of all, ARK Investment, the firm run by Kathy Wood. We've talked with her a lot on this air, just talked with her at Milken. Expanded its bets for Robinhood markets in the days before the bank brokerage's quarterly revenue missed expectations, sent shares spiraling. So a pair of ARK Exchange-traded funds, the ETFs, bought more than 836,000 shares worth at least $32.4 million of Robinhood in the 2 days leading up to the company's third quarter earnings release Tuesday evening.
Okay, so one thing we have to keep in mind about Kathy Wood is she's very transparent about what she buys.
Every day, you know.
Every single day. So we know when she buys something, and we know what happens to the company's stock.
And we report on it.
Exactly. We do. This article by Bailey Lipschultz. But you asked her about this in the context of Ginkgo when we were at Milken a couple weeks ago, Carol. And she said what was interesting is she said, yeah, we missed it by a little bit, but look where the stock is now. And indeed, the stock had risen dramatically since she got in.
Right. Markets, it's all about timing. And sometimes you're a little bit early, sometimes you're a little bit late, and sometimes you get hurt, a little bit of pain, and then sometimes longer term, it's just fine.
And she talks over and over again, 5-year time horizon. We want to see 15% annual returns. We want to see money doubling in 5 years.
Exactly. So we're going to talk about Robinhood a little bit more because I think it was a little bit of a, remember, this just went public.
Yeah.
It's new to the world. It got a lot of attention because of the pandemic and everybody trading on the platform, right, and using it. And yet I think everybody's wondering, okay, now what's the future trajectory and the revenue growth?
Also one of my decliners today.
I bet it is. Is Shiba Inu? Do I say it right?
I've been saying it wrong.
I'm
finally heard.
so lame. How do you say it?
Well,
Shiba Inu?
Shiba Inu, yeah.
Shiba Inu.
You're not. You are a dog person.
It's not the latest little trendy designer dog, is it?
No, it's the latest crypto. And Robinhood users would very much like the opportunity to spend their money on a joke based on another joke. Because remember, it's based on Dogecoin, which started out as a joke too.
See, where's our whiteboard when we need it? We also have Bitcoin breaking below 60,000. So yeah, there's a lot of stuff going on. You're listening to Bloomberg Business Week on Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Headline out of Washington. Democrat Neal says the billionaire's tax proposal is out of the Biden plan. Stay with Bloomberg for the latest on this developing story. Right now, we are looking at a mixed Wednesday for the U.S. stock market. The Dow lower, S&P, NASDAQ, they are both higher. S&P up 3 right now, up by about 0.1%. Shares of big tech names sending the NASDAQ 100 index to a record. Some of those names include Microsoft, up now by 5%. Alphabet, parent of Google, up by 6%. We've got NASDAQ up 108, up 0.7%. The NASDAQ 100 index up 148, up by 1%. But these gains far from broad-based. Russell 2000 slumping 1.2%. The Dow down 102, a drop there of 0.3%. 10-year yield 1.52%. Spot gold up $5.50 the ounce, up 0.3% to $17.98. And West Texas Intermediate crude down 2.3%, $82.72 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is the Bloomberg Big Take today. It's also the upcoming cover story, domestic cover story, Bloomberg Businessweek magazine. It's out tomorrow online at businessweek.com, on the Bloomberg terminal. And Tim, it's about the impact the pandemic has really had on the American worker, for better or worse, and for better perhaps in terms of some of the lasting leverage we could see when it comes to unemployment reform.
Josh Idelson wrote the story. He's labor reporter for Bloomberg News. He joins us from the Bloomberg 960 studio in San Francisco. Josh, congratulations on a great story. Along with the Great Resignation and Striketober, jobless Americans are fighting for unemployment reform that could translate into lasting leverage, but it hasn't yet begun to translate. Take us into it.
Thanks for having me. We are at this rare, turbulent moment in the workplace in the U.S. You have workers who labored through the pandemic, who shouldered great risk to themselves and to their families and didn't get the compensation or the safety protections that they felt they deserved. You have workers who were benched involuntarily and saw an unemployment system that they thought should be available and should be reliable failing them. You have lots of workers, historic numbers, choosing to quit their jobs. So this is a moment of both exit and voice. Some people are leaving their job. Some people are trying to band together. And in the places where workers have a union in the United States, we're seeing large numbers of workers authorize strikes, making October Striketober, as some put it. So this is all playing out at a moment when we have perhaps the last big bill of the Democrats' last stretch for a while of being able to legislate unilaterally being wrangled over. And it's one that could make permanent changes in ways that would change workers' leverage, including the unemployment system, that there's a relatively unusual effort afoot right now to organize jobless workers to transform.
So, Norm and Norma Ray moment. Everybody go back and Google that movie. But I mean, is this a big move forward then? Because we've seen unions, right, declining in power and in membership. But is this potentially a critical change when it comes to the power of the worker?
It's a moment of possibility, and in some ways it has the flavor of 1945. The way one historian put it to me is, when you have a national mobilization like a world war or a pandemic, you have all of these workers who get the country through it and bottle up some frustrations along the way, and then afterwards expect the debt to be paid back. We're in a different political moment, one where there's attention to essential workers and to inequality and to labor that hasn't been there at times. And we're in a moment where many workers, like people that I talked to in the film and TV industry over the past week, have higher expectations than they used to, have a different consciousness, both from the work they did during the pandemic, but also from their time out of work during the shutdowns, about the importance of their own time, and feel unwilling to accept some of the things they did in the past in terms of how work dominates their schedules and encroaches on their personal lives.
Josh, for the story, you spoke to people in several different parts of the country. I'm wondering, though, the Washington, D.C. connection, the lawmakers who are really on the side of labor right now, Senator Ron Wyden, Alexandria Ocasio-Cortez, representative from New York, what are they doing?
So Wyden, the chairman of the Senate Finance Committee, told workers that he will fight like heck to get something that is at least a down payment on fundamental change to the unemployment system into the reconciliation bill. There are things that could be done that would address some of the issues that workers have been raising over the years and that some experts have been raising for years without a lot of attention in Washington. Areas like the exclusion of many workers from the unemployment system and the race among states to cut off benefits more quickly.
Well, and I always think it's important when we do a story like this, and you do it, and you go there, Josh, in terms of what the U.S. system is maybe compared to what we see in other countries. And it's meager, right, in terms of the benefits compared to what other countries do for workers?
That's right. The maximum months that people can get benefits here are lower than you see elsewhere in peer OECD countries. It's a pretty stingy system in the U.S. And unemployment insurance, as stingy and unreliable as it is still controversial in part because it does give people a little more leverage to hold out a little longer against a mediocre offer they don't want.
Well, that's what we see happening in the labor force right now, right? This imbalance between supply and demand. Companies telling us each and every day they're having trouble finding workers, yet workers aren't ready to get off the sidelines and go take those jobs.
Well, keep in mind, many workers don't qualify for unemployment benefits, and many circumstances where you leave your job don't qualify you to get the benefits, and many people who were receiving benefits now are no longer eligible, either because of the federal cutoff or because of state cutoffs that happened before that. But that said, there is research that where there are more unemployment benefits, workers in some cases are able to hold out and choose to hold out for jobs that pay a little better. And that, depending who you ask, is one of the best or worst things about having this system. So the fight about unemployment is in part a fight about leverage in the labor market. And we did this cover story in part because right now there's a fight over workers' leverage that's happening on picket lines, and there's a fight over workers' leverage that's happening in Congress at the same time.
Well, and probably last question, Josh, but I am wondering about the political will, right? I mean, politicians are always thinking about their next ballot and also the support to keep their election or re-election races going. What is the political will to pick up on something like this? Because are these people who are fighting for some of these benefits, are these the people who really go out and vote?
That is part of why this organization, Unemployed Action, has come into existence, is that the jobless are not usually seen as a prominent political constituency that people have to cater to. And being unemployed is often not how someone wants to self-identify, and it's generally not something they want to continue to be true of them. And so this group has been struggling against the tide in many ways to create a forceful political constituency and one that people continue to be active with even after they've personally found another job.
Hey, Josh, just in the last 30 seconds that we have with you, at what point will you know, at what point will we know if this is a moment like post-World War II in terms of power for the labor movement?
And just got about 20 seconds, Josh.
We're going to have to see what happens in Congress as well as on the picket lines over the next months. But labor has been in a real catch-22 of needing more members and needing legal change, and people are desperate for a way to break out of that.
All right, it's the domestic cover story of Bloomberg Business Week, and it's written by Bloomberg News labor reporter Josh Idelson, so be sure to check it out. It's also on the Bloomberg terminal, and you can find it at Bloomberg.com and BusinessWeek.com.
Good story, Josh, and congratulations on the big take.
It just is another reminder of the pandemic impact on our world. All right, you're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, October 27th, and we do have stock market gains fading right now with the S&P 500 index barely up by half a point, has been fluctuating between gains and losses for much of the day, but right now, S&P 500 index, I'm calling that flat on the day. The Dow down 114, down 0.3%. NASDAQ up 93, a gain of 0.6%. 10-year up 22.30 seconds, 10-year yield 1.53%. Spot gold up $5 the ounce, up 0.3%, 17.97. A retreat for crude, down 2.4% at 82.64 a barrel. The NASDAQ 100 index trading at a record up 0.9%. Shares of major tech companies sending NASDAQ 100 to a record, while the broader U.S. equity market remains mixed amid a slew of earnings reports. General Motors says it does expect its production snarling semiconductor shortage to last into next year, a view that is weighing on its stock price even after reporting better than expected earnings for the third quarter. GM shares down 4.2%. What about inflation and supply issues at GM? CEO Mary Barrows interviewed on Bloomberg Television and Radio.
Well, we definitely are seeing commodity prices increasing, as well as the cost of logistics, which I think is impacting almost every industry. We're working and managing that right now, and again, because our product portfolio is so strong, I really believe it's the strongest cars, trucks, and crossovers we've had in my 40-year career here at General Motors, and that's what is allowing us to also have very strong pricing, and because we have strong receptivity from the customers.
And again, GM shares lower now by 4.3%. Also after earnings, Robinhood markets plunging now by 10.5%. Recapping, S&P now lower by half a point. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, we brought her in to talk about Robinhood, but we've really been talking about taxes and taxing billionaires behind the scenes around our table here in our studio.
Yeah, tax policy expert too.
She knows Robinhood. She knows tax policy. She is our investing reporter at Bloomberg News here in our interactive broker studio. Let's talk, though, a little bit about Robinhood. It's down about 10.6% in today's trade. Reported earnings after the close. I think it's below, right, easily its IPO price. So there you have it. Revenue fell short of Wall Street estimates. Cryptocurrency transactions plunging from the preceding period. What do we need to know, Annie?
So Robinhood's earnings yesterday did disappoint, and you're seeing the effect on the share price today. Like you mentioned, the stock's down 10%. The real story was around crypto transaction revenue, which was 78% lower versus the previous quarter.
It's like it disappeared overnight.
Yeah, and the reason we saw that, of course, is there was this gigantic run-up in Dogecoin in Q2, and that kind of abated. So now the big question is, that users have is, will Robinhood add more cryptocurrencies? They want Shiba Inu coin, which is completely different from Dogecoin. And they've struck a more cautious approach.
Completely different, but still a joke to me.
Exactly. A different joke about Shiba Inus.
It's a meme coin, right?
Yeah, exactly. Like wrapped up in a crypto.
Well, I was particularly struck by the decline in crypto because Bitcoin's price had gone up.
Do any of us own it? No.
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 No. Okay.
Shiba?
No,
I don't even know.
Shiba.
Shiba. Or Doge. No Shiba, no Doge over here.
Okay.
But I was particularly struck by this when these earnings crossed yesterday because the price of Bitcoin had gone up by something along the lines of 40% since the company last reported earnings. And my thought was, okay, well, doesn't that get more people off the sidelines and more people trading crypto and more crypto revenue for the company? But no.
So across the boards, crypto volumes were down by around a little over 30% in this quarter, just across the boards in the industry. But Robinhood felt it particularly because they had even said in the second quarter that Dogecoin made up more than 60% of their crypto transaction revenue.
Wow.
So it wasn't just crypto trading generally. It was specifically this surge in Dogecoin that was juicing their transaction revenue. in the second quarter. And now you've seen that abate. And then the other thing that's kind of spooking investors is the guidance that they gave. They gave some guidance in Q2 that like, hey, Q3 will probably look a little bit quieter on the trading front. And they've given similar guidance for Q4 unless we have another crazy meme stock or meme crypto.
Is it because everybody's got back to work? Because I'm hearing everybody hasn't come back to work. So help me out here. Like, I had a note, and I was going to say, has the company peaked already?
I mean, they definitely went public at just the right time. I mean, they were going public when they were absolutely on fire coming off of Q1 with stocks and options, going insane over GameStop and all the meme stock trading. And then Q2, you had this huge run up in Dogecoin, which they were ready to catch because they already offered Dogecoin. Coinbase didn't until June. So now that they're being a little bit more cautious in their approach on cryptos, and that now that there wasn't just one singular event that was quite like that in the third quarter, you're seeing a little bit of wobbliness.
It's that caution you write in your most recent story, Annie, that is playing out in terms of a tension between the safety that Robinhood is going for. It's in the crosshairs of regulators right now, and it doesn't really want to necessarily add every meme stock or meme coin, the ability to trade there. So how is that playing out for investors if Robinhood doesn't embrace the Shiba Inus of the world?
That's a really good question. Robinhood has gone through this evolution where they're trying to show now and have made really big strides towards being a more established, regulatory compliant brokerage. So they've done things like they've added customer service 24/7 or customer service calls 24/7. They've added some protections and bulked up in that area. And now they've got this problem of like they allow retail investors to ask questions on their earnings calls, and the top one was, when will you add more cryptos and when will you add Shiba Inu coin? So they have this tension of trying to toe the line maybe a bit more on the regulatory front, while also trying to placate these customers who really want, at least some of them really want some meme tokens.
Well, and you did point out in your story the brokerage brought on about 21% more employees in the period compared with the second quarter. So engineers, customer support, and compliance. Who are we supposed to compare them against? Because the CEO or the CFO kind of warned that we don't expect our growth to be linear. We do think it's going to ebb and it's going to flow. It's going to be highly dependent on things like market conditions and volatility. So can we compare them with, I don't know, the trading floor of a big bank or one of the, traditional brokerage, whether it's a Schwab or something? Who do we compare them against?
It's a bit of a tricky comparison because Schwab or Interactive Brokers are, of course, both retail trading platforms, but they have these other services. Particularly Schwab has a bank function. They earn tons of money from net interest income. So they have these other streams of revenue, whereas Robinhood is still mostly dependent just on transactions in cryptocurrencies, stocks, and options to earn its revenue.
Sounds like it leaves them a little bit vulnerable, right?
Which it does to things like volatility. To when fortunes shift as far as how much people are trading, that impacts Robinhood a lot more than it would a company that is kind of cushioned by having other business lines.
What about those other business lines that Robinhood is interested in adding? Crypto wallets. I think it's Bloomberg Intelligence's Julie Shariel that has written about the idea of this becoming potentially a super app.
Yeah, Robinhood is really into this idea of becoming a financial super app, so offering more, like you said, crypto wallets. They reaffirmed last night in their earnings that they're looking to add retirement type accounts, even though they didn't give a timeline for it. So they are trying to move forward on offering more and more products. But they're moving along on that. We haven't seen these launch, but we have the promise of those additional ideas.
Mauricio, who's a listener, says Doge is a meme coin, Sheeb is a meme of a meme, aka a scam coin. I mean, we don't know, right? We really don't know how all this stuff is going to play out.
Yeah, I mean,
or do we?
It is like a meme squared.
It's like Inception.
Yes, it's a meme Inception situation.
Oh my God, my brain hurts. Annie Massa, thank you so much. You always set stuff straight when it comes to this world, so thank you. Annie Massa, she's an investing reporter here at Bloomberg News in our Interactive Broker studio. And just a quick check on what we're seeing with Robinhood. Shares of Robinhood, what are they? They're down about 10.3%.
10.3%. All right. Well, let's head to Washington, D.C. Nancy Lyons is standing by in the 99.1 studio there for the latest world and national news. Hey there, Nance.
Thanks, Tim. The White House is stepping up pressure on congressional Democrats to finalize at least the framework for a deal on President Biden's economic agenda. before he leaves tomorrow for a series of meetings in Europe. A proposed tax on billionaires outlined earlier today has already been eliminated from the plan. That's according to Congressman Richard Neal, while a surtax on millionaires is still being debated. Earlier this afternoon, White House Press Secretary Jen Psaki said there's still a chance they'll reach consensus in the next few hours.
What we're talking about here is the nitty-gritty details, as I like to say. That's always what the focus is on at this point in the negotiations, but it's only 1:30. We've got some time.
Psaki says the president may make a trip to Capitol Hill if he feels it's necessary. Attorney General Merrick Garland has been discussing his department's initiatives with the Senate Judiciary Committee today, whose ranking Republican says Garland has moved the Justice Department as far left as it could go. Bloomberg's Irv Chapman has more from Washington.
Chairman Richard Durbin ticked off violent incidents at school board meetings, while Senator Charles Grassley said Garland's new task force would squelch parents' free speech.
In a rising tide of threats of violence against judges, against prosecutors, against election administrators, against doctors, against protesters, against news reporters. That's the reason that we responded as quickly as we did.
Democrats brought up voting rights and gun violence. Republicans cited illegal immigration and the Hunter Biden investigation. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Nancy Lyons in our DC bureau. So one of the stories that caught our attention, we just wanted to bring to your attention, has to do with the McLaren CEO abruptly resigning.
Mike Fluitt's going to step down after 8 years leading the closely held company, which has started for a search for a successor.
Yeah, the company's saying that Michael Macht, a McLaren Group non-executive director, will oversee technical and operational functions, while the chairman, Paul Walsh, will lead sales, marketing, and public relations. Now, Fluitt, who's stepping down after 8 years leading the closely held company, he is, I just lost my place here. He joined McLaren as chief operating officer back in June of 2012 and became CEO just about a year later.
The car maker is controlled by Bahrain's sovereign wealth fund, and it's been repairing its finances after the pandemic halted production of the Formula One racing franchise, scuppered the Formula One racing franchise. In July, McLaren raised £550 million. It's about $755 million from existing investors. And the sale of preference shares and equity warrants to new backers are his management.
I know Matt Miller isn't in today, but I can just hear him being like cringing because late last year we saw the McLaren Group agree to sell as much as a third of its racing unit to a consortium of U.S.-based investors. In April, the company sold and leased back its headquarters near London. So they have been figuring out this company, what the future is, selling off assets and operations to figure the way forward.
Is it going to be a SPAC? That's a question.
I know. Combining with a blank check company is an option McLaren may consider around mid-decade if all goes well with its restructuring efforts, according to a person familiar with the matter. They said that in December of last year.
Such deals have been popular among auto manufacturers. Volvo Car Group backed electric vehicle maker Polestar, announcing a combination with a special purpose acquisition company just last month.
A lot going on in the auto industry. We certainly are seeing it. We got GM earnings today. It continues to be some chip issues. They also are continuing their pivot towards EVs. We're going to get Ford after the closing bell.
Anything else happening in the auto industry?
Let me think. We had him on earlier this week, Eric Schatzker. He continues to give us great stories when it comes to Hertz and a few other companies. We're going to get to that in just a moment.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelletta. Bout of selling, lows of the session right now on the S&P 500 index. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
In spite of that selling here, stocks are still trading mixed on a busy day for earnings. Dow's currently down 178 points. S&P's dropped 10. NASDAQ is still higher by 44. The U.S. 10-year yield at 1.53%. Gold is up 3 points. Bitcoin is down by 5%. And transports drop 137 points. Among the main 11 S&P sectors, only telecom, consumer discretionary, and tech were in the green. Energy was under pressure. And leaders to the upside in the Dow, Microsoft, McDonald's, and Coca-Cola, while Visa fell 6% after earnings and led to the downside. Also after earnings, Twitter fell as much as 10%, Enphase gained 27%, and Microsoft and Google traded to all-time highs. In other news, Hertz signed a deal with Uber and Carvana in the next step after Tesla, and wrapping things up, eBay reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg type squawk SQUAWK on your terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, among our most read stories on the Bloomberg, another one having to do with Hertz and Teslas. This time we're adding in Uber and Carvana. Let's get an update on this ongoing story from our own Eric Schatzker.
He's editor-at-large at Bloomberg News. He's with us in the Bloomberg Interactive Broker Studio. So the big news earlier this week was, of course, Hertz buying 100,000 Teslas over the next 14 months. Now it's partnering with Uber to provide Teslas to Uber drivers. How's it going to work out, Eric?
Quite simply, Uber drivers are going to rent Teslas from Hertz. Not quite the same way you and I rent Teslas, or will rent Teslas perhaps from Hertz, but pretty close. Instead of it being a day-by-day rate, there's going to be a weekly rate. It starts at $324. It's going down to $299. And the sales pitch to the Uber driver goes something like this. Right now, you've got to bring your own car. And if you want to drive an EV, you have to bring your own EV. That means, generally speaking, you have to go to Tesla. Perhaps you could go to GM. Perhaps you could go to a few other companies. But you're probably going to lease it, or you're going to buy it and finance it with a bank. You're going to have to make payments. You're going to have to maintain it. You're going to have to get insurance. You're going to have to do all the things that those of us who own cars do. And in addition to sitting behind the wheel for 12 hours a day, that's not so much fun. And it's a hassle. And the idea being, if you pay this weekly rate, you get rid of all that stuff. Hertz takes care of that for you. All you have to do is show up to the Hertz location, take the car, go out, pick up your riders, complete your trips, and drop the car back off. And furthermore, I should add that Uber, because it wants to go green, Dara Khosrowshahi, the CEO, has some pretty big ambitions when it comes to fighting climate change, is paying Uber drivers $1 per ride, up to a maximum of $4,000 per year. And if you, the Uber customer, chooses to go green, the driver gets an extra 50 cents. So in many cases, it could actually work out to the driver's financial benefit to do this as opposed to buying or leasing.
Win-win, it sounds like, certainly for the Uber drivers.
Yes. At the very, very, very least, even if it's a wash financially, think of all the hassle you give up.
I have to say, this story, I am fascinated by the Tesla component, Eric, but I am so fascinated by what's going on at Hertz and how they are redesigning that company just a few months out of bankruptcy and thinking about what they want to be going forward. It's not like your father's rental car company.
No, these guys are not old hands at the car rental business. They're hedge fund people. They're private equity people. They look at this with a fresh set of eyes and question every single aspect of the business model, as opposed to getting up every morning and thinking, oh, I'll just do what I did yesterday.
Well, but how much of it is Mark Fields, too, who is kind of your old car guy, right? I know he now works for TPG, but how much of what's going on is Mark's vision as well?
Well, he's the interim CEO, and It's not clear how long he's going to last at Hertz. He is clearly... Well, he is most definitely a part of the execution. Mm-hmm. He's responsible for making this happen. But the ideas actually came from the financial guys. They concocted these ideas and nurtured them as they were contemplating whether to make a bid during the Hertz bankruptcy auction. They put in a $6 billion bid. It was very competitive. Many people thought perhaps they were overpaying. And now it looks like an awfully good deal.
I keep thinking of Jim Coulter, who we talked to at when we were at Stanford, and the Rise Fund. Like he's thinking about climate. He's thinking about disruption, certainly, and the impact on our environment. And I just feel like he can see that riding over this.
Mark Fields said it to me this morning. He said, we are trying to disrupt ourselves and hopefully then disrupting the industry.
Eric, where does Carvana come into this?
Carvana comes at the back end. If you think about the car rental business being three principal components, buying cars, renting cars, and then selling cars, Carvana comes in on the selling part. Up until now, Hertz has been disposing or exiting vehicles, as they like to say, either by selling them off at Hertz locations, which is not a bad business, but also getting rid of them through wholesalers or through auctions. And those are bad businesses because those cars tend not to sell at high prices. They give up a lot to the middlemen, and the recovery is low. And of course, if you have low recovery on the back end, your profit margins overall deteriorate. The idea by partnering with Carvana, home of the car vending machine, is that you'll get a much higher resale price even after Carvana's commission by going direct to consumer. So the same DTC concept that is animating a company like Nike is now actually helping to improve margins at Hertz.
Did you use the word or phrase asset utilization yet?
We haven't used asset utilization.
Why is this important?
Well, because one of the missions when you're renting cars is to keep them on the road as much as possible. Goes without saying. However, if many of your customers only want a car on the weekend or infrequently, you've got to find something to do with that car during the week. So think about it this way. A leisure customer, like myself perhaps, might go and rent a Model 3 for the weekend, and then the Uber driver takes over and uses that car from Monday to Friday. Thus, the car is busy 7 days a week, and Hertz comes out on top.
That's good asset utilization, right?
Yes, maximal asset utilization.
Hey, Eric,
go ahead. No, go ahead.
Does it lead to more sales of Tesla vehicles beyond the 100,000 that you reported on Monday?
Well, there's clearly an implication that it might, because in the, as part of the Uber agreement, there's 50,000 cars set aside for Uber drivers, as many as 50,000 between now and the end of 2023, but there's the potential to extend it to 150,000. These are all Teslas. It's an exclusive deal with Uber to rent Teslas to drivers. So yes, potentially many more Teslas down the road.
Yes or no? Should we be watching Avis? Next move?
Avis is watching Avis, that's for sure.
Eric Schatzker, great stuff. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Oh, we're going to, at some point, take what we talk around the table during our commercial breaks.
Yeah.
And put it out there for you.
Parental discretion advised.
Yes, exactly. We'll have to be careful about it. Hey, we never have to be careful about Dave Wilson. Whenever he comes, it's always with smart stuff, and we're going to get to his chart of the day.
Yeah, and of course, the song of the day as well as the stock of the day. They're happening in just a couple of minutes. In the meantime, a check on a trading day. Here's Charlie Pellet.
Hey, choppy and fast moving. Here's what's going on. We've got the Dow, the S&P lower, NASDAQ higher. Right to the numbers. We did see the NASDAQ 100 index at a record. Not anymore. It is still higher, but no record there, up 0.5%. NASDAQ Composite Index up 43, up by 0.3%. S&P on the minus side, moving lower by 12, bouncing off the lows of the day, but down now by 0.3%. The Dow tumbling 194 points, down 0.5%. Key takeaway, it is tech earnings that are driving NASDAQ higher. We've got right now the 10-year yield 1.53%, 10-year up 20-30 seconds. Spot gold up 0.1%, up 2.75 the ounce at $17.95. West Texas Intermediate crude down 2.9%, 82.23 for a barrel of WTI. A decline in commodity prices also weighing on markets. West Texas Intermediate down 2.9%, 82.22 a barrel. The proposal to tax the assets of billionaires is not dead. That, according to Senate Finance Committee Chairman Ron Wyden. Earlier today, House Ways and Means Committee Chairman Richard Neal said the proposal is now out of President Biden's economic agenda. Former Treasury Secretary Steven Mnuchin says he is opposed to the introduction of new taxes and warned about the potential knock-on effects of a proposed levy on the super wealthy. And speaking with Bloomberg Radio and Television at the Future Investment Initiative in Riyadh, he also had this to say about the inflation outlook.
I think the problem with the billionaire tax is, one, it probably won't raise much money since a lot of this money will be given away to foundations, so it won't be taxed. The other issue is it's probably unconstitutional. And the third issue is it creates very, very bad incentives. How do you tax public securities and not private securities? Think about this. It's a complete disincentive to grow your business.
And again, that's the former Treasury Secretary, Steven Mnuchin. Boeing working with China's regulators to clear the 737 MAX to resume commercial flights in China by year end. After earnings, Boeing shares lower by 1%. And GM says it does expect the production snarling semiconductor shortage to last into next year, a view that has weighed on its stock even after reporting better than expected earnings for the third quarter. GM shares down now by 4.7%. Recapping, stocks lower with the S&P down 10, a drop of 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. The song is Waterfalls. I had the album. I had the compact disc when I was.
I bet Tim danced around the room to this.
You know what? Summer camp, big summer camp.
How old were you?
I think I was probably 11.
Yeah. Okay, that's really sweet.
There you
Left
go.
Eye,
So
Chili,
and T-Boz.
T-Boz, the T of TLC.
Wow.
Yep.
Impressive.
Sometimes it happens.
But you know, TLC has a few other meanings too. Of course, we know it as tender love and care.
True.
But if you're reading some research out of Bank of America, you could call it tax loss sale candidates. There's your TLC.
Oh, yeah, that's the other TLC I was thinking.
Yeah, well, that's why I'm bringing you this chart, Carol. It's something that Savita Subramanian, their chief U.S. equity strategist, and a couple of colleagues put together. And as part of their report, what they did is they looked at S&P 500 stocks that had fallen at least 10% in the first 10 months of the year, setting them up for potential sales to lock in tax losses and get benefits when you file your returns for the year. And then it tracked how they did as a group for the following 3 months. So to January of the next year. The 2020 gets you to January 21. And what you find when you run the numbers, as they did, is that more often than not, roughly 2/3 of the time, this group of stocks does better than the S&P 500. And you're talking about, on average, coming out ahead by a bit more than 1.5 percentage points.
Is it because they're just so beaten down?
Yeah, there is that.
Kind of value.
And certainly the tax selling, to the extent it's happening, can get stocks even more beaten down to the point where people maybe see value in them and go ahead and buy as that year-end process unfolds going into January. So, it's just sort of a suggestion, and it's interesting, the idea that you could see this kind of a reversal in performance among a group of stocks that, has been beaten up the way these have, because let's face it, the S&P 500 doesn't often fall 10% in the first 10 months of the year, so kind of by definition, they're trailing the market as a rule. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
You didn't do taxi and limousine commission, the other TLC.
I could have done that. That's true. I was leaving that for you, Tim.
It's like 4 TLCs.
So many. Very nice.
There are probably more where they came from, and if I could run Google fast enough, I'd tell you what they were.
I'm not going to cheat. There's so many TLCs, but there's only one stock of the day. What do you got?
This is true, and it's Liberty Oilfield Services. The ticker on this one, LBRT. We're talking about a company that provides fracking services, went public in 2018 at $17 a share. And, given what we've seen in the shale industry, has really kind of struggled to stay above that price and, has fallen rather substantially at times. Just yesterday, the stock got back to around $16. And then the company came out with third quarter results. They didn't go over so well. I mean, revenue beat analyst average estimate in the Bloomberg survey, but, EBITDA, that earnings gauge, earnings before interest, taxes, depreciation, and amortization, came up short. And, that was not what people wanted to see, especially, pointing out Liberty was raising prices during the quarter, and they had issues with the supply chain. Surprise, surprise. Put that all together, Liberty Oilfield Services headed for its biggest loss in about a year. It's down at the moment by more than 13%.
And what's interesting is I was just looking at the stock. It hit, I guess, a recent low back at the early part of August, and it's up about 45% since then.
Giving back a fair chunk of that gain today, for sure.
Yeah, even year to date, it's still up 31%. But like you said, Dave,
giving back some.
Still not above that IPO price.
LibertyFrac.com, based in Denver, about a $2.5 billion company.
There you go.
Great song, TLC.
Yeah, you still got that in your head, don't you?
Taking us back to Tim's childhood.
That's about enough of that. Let's head to Washington, D.C. Nancy Lyons will save me. She's in our 99.1 newsroom in D.C. Hey, Nance.
I will save you. New Mexico authorities are asking the FBI to analyze the bullet fired by actor Alec Baldwin that killed a cinematographer on the set of his film last week. Santa Fe County Sheriff Adon Mendoza said at a press conference today they've collected 600 pieces of evidence.
These include, but are not limited to, 3 firearms, approximately 500 rounds of ammunition, and several pieces of clothing and accessories. We believe that we have in our possession the firearm that was fired by Mr. Baldwin.
Mendoza says they've also retrieved the projectile that was actually fired. It was removed from the shoulder of the director who survived. The Attorney General is under the microscope on Capitol Hill. During a Senate hearing today, Merrick Garland said his top priority is upholding the rule of law. He stressed the Justice Department aims to keep the U.S. safe while preserving civil liberties. Republican Senator Chuck Grassley leveled an attack against Garland right out of the gate.
Since your confirmation, in less than a year, the department has moved as far left as it can go. You've politicized the department in ways it shouldn't be.
Grassley's comments were refuted, though, by Senate Judiciary Chairman Dick Durbin, who says under the previous administration, the Justice Department played the role of former President Trump's personal law firm. The U.S. has issued its first passport with an X gender marker. The State Department says the X can be selected by people who identify as non-binary, intersex, and gender nonconforming when applying for a U.S. passport or a consular report of birth. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, along with Tim Stanovic in our Interactive Broker studio. This is for Julie Connor, who is a often listener, consistent listener to Bloomberg Business Week, reached out to me. We've talked. She's in real estate, so there's a couple stories for Julie.
Yeah, let's start with one here in New York City. The prime neighborhoods have seen a big jump in home prices. In the third quarter, Greenwich Village and Chelsea, expensive to live in staples of downtown cool. They each saw resale prices jump to a median of $1.3 million. The gains from a year earlier were 40% and 24% respectively. So 40% for Greenwich Village and 24% for Chelsea. Upper West Side, Carol, the median rose 20% to $1.2 million.
And your hometown, or home borough, I should say, Brooklyn's prime neighborhoods, all close to Manhattan, are faring the same. Resale prices in the Cobble Hill, Boerum Hill area increased 20% to $1.12 million. In Williamsburg, they climbed 17% to $1.16. You own, right?
Yeah, and I got to tell you, it's pretty surprising.
Nuts?
It's nuts. It's nuts to see. We live in a relatively big building, and it's nuts to see that transactions have been happening so frequently.
Right.
And considering where we were in April of 2020, just thinking, wait a second, what's going to be the future of New York City? Do people want to live here?
Well, it says buyers are homing in on well-located properties as the city edges closer to a post-pandemic normal and employees return to their offices. New Yorkers who fled to far-off locales are now putting an emphasis on being close to work in the epicenters of nightlife. So that's going on. If you look at sales at the end of September, highest price sale, $60 million. Median home price, $780,000. Change in price from last year, up about 19%. Can we talk about a mega mansion?
Yeah, let's go from New York to California.
We're there.
Okay, so the developer of one of the biggest homes ever built in the U.S., it features a 30-car garage, a moat, filed for bankruptcy to keep lenders from foreclosing on the L.A. property.
Dubbed the One, the mansion was being developed by Crest Lloyd LLC when a fight broke out with lenders, including Henke Capital. The lenders went to court in L.A., claiming they weren't being paid according to court papers. Eventually, a receiver was appointed to handle the project. Stuff's going on.
I guess it's not the one.
Must be, yeah. But doesn't everybody need a moat? Julie, tell us, does everybody want a moat?
$500 million.
All right, this is Bloomberg.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Choppy session, mixed trade right now. We've got 13 minutes to go ahead of the closing bell. The Dow lower, S&P lower, NASDAQ pushing higher. NASDAQ 100 index off of a record. Right now, let's begin with the NASDAQ 100 index full of tech names up 0.6%. Those names include Microsoft rallying to a record up 4.6% after earnings. Alphabet after earnings up now by 5.8%. NASDAQ Composite Index up 48, up 0.3%. S&P down 11, choppy session, a drop there of just about 0.3%. The Dow also retreating by 194 points, down now by about 0.5%. 10 years up 19.30 seconds, 10-year yield 1.53%. Gold up 0.2, 17.96 the ounce, up 3.28 the ounce. And West Texas Intermediate crude down 2.9%, 82.18 a barrel on WTI. Bitcoin down 5.7% right now, 58,532 on Bitcoin. ExxonMobil raising its dividend. The oil giant's decades-long streak of raising annual payouts now extends to 39 years. ExxonMobil shares lower by 2.4%. And that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
As supply chain woes have wreaked havoc on the global economy, one choke point in particular has stood out: America's woefully inefficient ports. Ships idling off the coast, waiting to offload goods, have become an icon of paralysis. Such delays impose serious costs. Retailers face shortages, manufacturers have slowed production, goods have spoiled, and exporters have lost customers. Experts expect the crunch to last for months. U.S. ports have exhibited shortcomings for years. Not one cracked the top 50 in global efficiency. Why? In part, lack of automation. Fearful that jobs might disappear or migrate to offices from the docks, unions have resisted the kind of automation that is standard overseas. The result was serious turnaround delays even before the recent swell of pressure on capacity. Automation won't make sense at every port, but its potential benefits are plain if coupled with data sharing and worker training. None of this will be cheap, but few investments offer as much potential to grow the nation's economy. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
Now, funky music will drive us till the dawn.
On Bloomberg Radio.
All right. Definitely a different market picture that we've seen in the last hour or so, because we were bouncing around a little bit, but we have fallen off our highs, really taking a leg down and taking another leg down as we get closer to that closing bell. Charlie, of course, breaking down the numbers. The NASDAQ just barely holding on to a 0.2% gain after the NASDAQ 100. We did see hit a record earlier in the session, an all-time high, propelled by some of those big tech names, Microsoft and Google among them, which has really provided a lot of momentum. Let's get to the drive to the close.
Barry James is the president, CEO, and portfolio manager at James Investment Research. He joins us on the phone from Alpha, Ohio. Barry, it's great to have you. I want to get your overall thoughts on the market before we get to your stock picks. How do you trade a market like this?
I think we're in a rotation period. I see a confluence like the Mississippi and Missouri rivers where they meet. You got a green river and a brown river, and then it becomes a straight brown river after that. And that's kind of where we are. The COVID is looking like it's coming back down. Inflation's a problem. Bottlenecks are a problem. Rates, even though they're down today, have been heading higher, and the economy's a little more normal. So I think we have this transition from the tech area, from the growth area, from the large cap, into the cyclical value and smaller types of stocks, and that's where I would be focusing today.
And yet, you say that about rotation from tech, and yet everybody's been all in on Google and Microsoft today.
You're 100% right. And it's kind of like these big storms on East and West Coast. You know, something can come up that totally changes everything for the moment. And that big thing is interest rates. If you just follow the bouncing ball, as the rates go down, tech goes up, rates go up, tech goes down. So, it's maybe a one-off. I don't know.
Right. Well, what is, though, the smart correlation? Because also higher interest rates can mean an improving economy, and those companies stand to benefit as much as anything else of a reopening of the economy. Obviously, supply chains and inflation fears aside, I mean, we saw companies like McDonald's and Coca-Cola being able to push higher prices through.
That's exactly right, and that's exactly what we're looking for. And like our fund, the Golden Rainbow Fund, we're trying to find companies that have pricing power. And if they don't, and the easy way to do that is to look at the operating margins and can they really give them a boost? That's kind of the behind-the-scenes type of numbers to look at. But without that, the companies are going to really be hurting. That's for sure.
Why specifically are you concerned about stagflation? What are the signs that you're seeing that are telling you that we could be in a stagflationary period?
It's very interesting. I got a job offer at McDonald's yesterday, in my bag. They said to come work for us. and then a lady.
Are you serious, or are you just having
office,
some fun?
No, that's just actually. I mean, they had it there. They're giving everybody that goes through their drive
because they're looking for workers.
And a college student told a professor around here. He says they asked one question at the interview: "What's your size?" But anyway, that is an indication that we're going to have higher wages. You see it all over the place, and so that's one side of it. Stagflation is maybe a little bit of a strong term, I would say, just because you've got the consumers with 140 some odd $trillion that they have that they can spend, and you have all these companies are needing to expand. So those should continue to keep the economy going. But it will be more expensive. And the lady that works up, at the front up here at my office, she said she went to get a roast and it was like $30 for a small roast. And she says, "Well, I guess we won't be having roast for dinner."
No, people are talking about Thanksgiving. Get ready to pay up. We often see maybe a price tick because of the demand, or just because people know we got to buy turkeys and all that good stuff, but because of some of the concerns about the supply chains that we are going to see higher prices. Hey, economic news, you've got a Fed meeting just around the corner. We get a read on GDP tomorrow. How might that impact investor sentiment?
I think everybody knows the Fed is going to, taper, but maybe they'll believe them this time. I'm not sure. But as we've seen before, the last, taper back in 13 or so, it had a very short-term impact and then rebounded. So I don't think it's going to have that much of a call on things, to be honest. Maybe a short-term, and maybe that's what today is all about, in anticipation of that. But
yeah.
Probably not a long-term thing.
Well, I promised we'd get to some of your stock picks, and I want to start with an Ohio company where you're joining us from, Fifth Third Bank, the Fifth Third Bank Corp. Why a pick for you?
Well, it's a really well-run company. I don't have any inside information, but they have a history of beating their estimates, both the top and bottom line. Looks like loan growth is picking up again. If we do have this Fed tapering, pushing rates up is always a good play for the banks. Not obviously today, but this is maybe a better chance to do some buying. So those are the areas, and it tends to focus Midwest, Southeast, which are very, very strong areas. So it has the pieces of the puzzle, and it's more of the cyclical type of stock that we're looking for right now.
Got another name for us?
Yeah, well, you were talking about the shipping.
Yeah.
And we like Old Dominion. Maybe it's not the guys right at the port, but
right.
They do more interregional and multi-regional type of hauls. But they've done real heavy investing in their employees and equipment, and they're really keeping the people that they have, which a lot of trucking companies are having difficulty doing. And we really see that they have gas surcharges and whatever, so they have great pricing power. So we we believe that, their high operating margins and the free cash flow margins and those sorts of things are good for the future.
Old Dominion on a tear this year. It's up almost 66% as we speak. Hey, we got to run. Barry, thank you so much. Barry James getting an offer to go work at McDonald's. President and CEO and portfolio manager over at James Investment Research, joining us on the phone from Alpha, Ohio. But that is our world that we live in.
That really speaks to the way that companies are looking for workers right now. He's going through the drive-through. He's getting an offer for a job.
Right. They're desperate. We see it big time, and we see it certainly at some of those entry levels, you would say, or lower positions. We definitely have heard it from some of the CEOs that we've talked to. Hey, just want to bring your attention to the markets because just got a few minutes left. We've definitely seen a leg down. We are at our lows of this session. It's pretty dramatic in terms of the turn of events. S&P 500 just down 21, but again, well off its highs of the session, down about 0.5%. Dow down 0.7% off 253 points. The Dow's been under pressure for most of the day. The NASDAQ 100, we saw it hit an all-time high. Different tone to the NASDAQ right now, though. Just up about 3 points. Call it unchanged on the day. Time to get to our cross-platform coverage. Radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Shonali Bassett, counting you down to the closing bell. To take us beyond that bell with our global simulcast, Carol Massa, Tim Stenovic, bringing together our Bloomberg TV, radio, and YouTube audiences, and we take them through what has been a pretty volatile day. We are moving towards, well, really risk aversion towards the end of trade, Carol, whether you see it initially in the bond market and spilling into the equity market.
Yeah, look at what's happened in the last hour or so. We have hit lows when it comes to the equity markets, really taking a leg down in just the last few minutes of trading. Talking with our Vince Signorella, who is on our Global Macro Squawk Desk, saying maybe there's some trepidation, about the GDP report tomorrow. Maybe a downside miss could be something that markets aren't ready for. Maybe it's that, but it's really pretty dramatic, Tim.
Yeah, and early in the day, it was very earnings driven. And may I remind you that we are not even close to being done with earnings season yet. We got Apple and Amazon tomorrow, and today we have Ford, Twilio, eBay, and more just after the bell.
And I think as we talk about earnings, Tim, another driver that we saw that was interesting was the 5-year bond auction that was very strong after yesterday's 2-year bond auction. That's when you saw 2-year yields really now climb up to about 50 basis points. And this was the highest yielding 5s that we had going back throughout the entire pandemic. So this gives us a pretty good indication of where people think yields are going to be if we ever get the taper announcement, Shonali, from the Federal Reserve.
Yeah, I have to hand it to you, Taylor. A lot of the story today was about that global flattening of the yield curve, those 30 years that flocked to safety. And, that jarring move in the S&P separately was really noticeable and sent a lot of stocks a lot lower.
And it's a global story. Remember what happened over in the UK? We saw significant moves in UK gilts on the back of perhaps less supply next year. We saw the Canadian policy response coming in and pushing up the yield curve on the front end as they look towards perhaps a dialing back of their support. We look at the S&P 500 and the ringing of the bell, down by 22 points, down by 0.5%, the lows of the day. So clearly, suddenly the mood music ramped lower in the last hour of trade, and we close down at 4,551, spot 68. So that's a 23-point move. The Dow also underwater by 0.7%, 265 points lower, 35,491. The Nasdaq just clings to gains. We're basically up less than a point, 15,235. So not even Tesla, Microsoft, Google could help in that respect. And small caps were your underperformer of the day. Let's just zoom out and see where Russell 2000 was at, down by 1.9%, Carol.
Yeah, straight line down. Just taking a look at the broader market, the S&P 500, most names in that average today ended in the red. 422 names to be exact, down 82 higher, 1 unchanged. So no doubt about it, Taylor, we saw a lot more red here, certainly at the close.
Well, and you're right that not only a lot of the names, but a lot of the sectors in the red as well. Take a look at our sector index that we do for our radio audience every day. It's the sector winners, it's the sector losers, and unfortunately within the winners, half those are actually losers. Those are all still in the red. Let me take you through a few of the gainers that we have. It's media and it's autos. How much of this can continue to be? I know we were talking about Hertz and Tesla, even though some of the autos like GM, as we await Ford as well, a little bit lower on the day given the chip shortage. Let's migrate down to that bottom of the screen. This is interesting. It's banks and it is energy. And dare I say it, more of that flattening of the yield curve, Carol, which does not bode well for the financials and maybe concerns about those global growth concerns. It hits energy.
Yeah, really good point. Let's get to, though, there were some gainers. McDonald's among them, up 2.7% by the close today, jumping Food and consumer goods companies, we saw it. They were able to pass price increases through. We saw it with Coca-Cola. We saw it with McDonald's. And that stock also boosting comparable sales, almost 10% above Wall Street expectations. Want to mention Enphase. Oh, my God, up almost 25% in today's session. Top in the S&P 500, sending its solar peers higher as well after Enphase's sunny third quarter sales and fourth quarter sales forecast topping estimates. See what I did there? And got to talk about an IPO. Rent the Runway. It actually was higher. I know.
Busted.
Tell Romaine.
We will tell Romaine.
It was up 18% going into the show. I was busy in my show, so I couldn't update it. It ended up down 9%, but it upsized its IPO price, shares at the top of a marketed range. I want to see how it trades tomorrow.
Wow, volatile day for Rent the Runway. Hey, let's talk Robinhood because it closed down 10% below its July IPO price. Third quarter revenue, we learned from the company yesterday, it came in short of expectations. Cryptocurrency transactions, the big story, though, plunging from the previous quarter. Comments from the company's CFO, Jason Warnock, did not help, saying that we don't expect our growth to be linear. We think it's going to ebb and flow. We're going to depend on market volatility and market conditions. I want to talk Twitter, too. Shares finishing the day down more than 10%. Another earnings story. It's the second worst performer in the S&P 500 today. The biggest drop in 6 months, down for 6 days in a row. Third quarter revenue and fourth quarter sales outlook fell short of Wall Street estimates. Price targets were lowered at Evercore ISI, Jefferies, and JP Morgan. Finally, GM, General Motors, finishing the day down 5.4%. Adjusted earnings came in above estimates. Full year guidance saying they come in at the high end of the forecast, but it's about chips. Shares erased gains after the company indicated a chip shortfall has curbed production, Caroline, for months and won't end anytime soon. Mary Barra, the company's CEO, telling our colleague David Weston, quote, it's going to linger into next year, and right now our feeling is that we'll be in a much better shape in the second half of 2022.
We're going to talk supply chain issues, eBay coming out after the bell as well, and they're perhaps a company that's going to benefit from it all. But I'm looking across asset right now, and looking commodities seem to be a bit of a sea of red. Actually, oil taking a tumble off by 3%, down at $82 is where we trade for WTI crude. But we saw metals also take a leg lower. This on the back of China, whether or not we see them ramp back up coal production in the face, of course, of their focus on slightly cleaner energy production. But they ramp up coal, that means aluminium might be able to be produced at a little bit faster. So we saw metals just down on a supply side kind of issue here. Also, we look at oil as we look towards UK and Iran once again opening talks. Could we see supply side come back on tap a little bit? So pressure in commodity space. Flip it over to what's happening in your FX space. And we had a story of, well, Canada, a hawkish surprise. The loonie, the Canadian dollar doing well. That's as their short-end yields also pushed up higher. Swedish krona also advancing that somewhat. And interesting that we had what we heard out of the UK, which really saw phenomenal moves in bond markets worldwide. Look at what happened to UK debt. We saw yields screech lower in United Kingdom, 30-year, look, off by 18 basis points, as they say we're going to be issuing less debt from a government perspective next year.
Yeah, 5 seconds before we're awaiting some big earnings to cross the bell. In the meantime, it is a yield curve flattening. Of course, that's what we are getting with yields coming up 6 basis points, 5 basis points on the 2-year, and really coming down to a 153 on the 10-year. Carol, down to a 194 down on the 30-year. You're down 9 basis points on the day.
All right, let's get to it. Ford out with their earnings right now after the close here. Stock still unchanged here, but raising its 2021 year guidance, says financial flexibility enables the company. Waiting for some numbers here to cross the Bloomberg. Stock now just up about 0.7%, but raising its guidance. I mean, one of the big issues, and this is coming off of General Motors, obviously it's chips, their ability to access chips. Computers are so crucial, of course, to cars today. So whether or not that kind of slow down their production, and also the pivot to electric vehicles, Caroline, that becomes a big thing. The stock now up about 1% in the after hours.
Meanwhile, we look to eBay, of course, a company that might well do rather well in supply chain pain as we try to find furniture that we can't find new. We go onto eBay to try and source instead, and perhaps some of the price points go higher. We're currently up just 0.1% after hours. They're talking about third quarter net revenue coming in at $2.5 billion, basically in line with where the market had expected. Gross merchandise volume coming in stronger, $19.5 billion. Now, this after they had, perhaps the headwinds that we were all going back out, wanting to travel, wanting to experience services rather than buying once again. We do see an adjusted earnings per share coming in ahead of expectations at 90 cents on continued operations. Active buyers, slightly shy of where had been hoped, 154 million. The market wanted 166 million. But they do also see the fourth quarter adjusted earnings per share going in at 97 to $1 1 cent, the estimate from a 99 cents. Basically, they're coming in line and the market have priced it in, Taylor.
And Carol, I know that you're continuing to look at forward, increasing the guidance for the full year now, adjusted EBIT between $10.5 billion and $11.5 billion, and reinstating a resumption of that stock dividend, of course, that we knew that we were following.
Well, and Ford was expected to come in better than General Motors, and check it out, because it is up more than 4% in the after hours. As you said, Taylor, right to the important stuff, boosting its year outlook. Third quarter adjusted EPS of 51 cents a share, a mega outperformance. 27 cents was what the street was looking for, announcing the resumption of its stock dividend in the fourth quarter. And what's interesting, raising its year, as we said, 2021 guidance, but this is a stock that has been on a tear. It's up almost 80% this year, and nonetheless, investors very enthusiastic here in the after hours, Tim.
President and CEO Jim Farley saying, quote, "This is the most exciting Ford lineup I've seen, but what matters is that customers love our new products and services, and we are just getting started. The trajectory of our business gives us huge confidence in Ford Plus, and we are obsessively turning the plan's promise into reality." Shonali.
Yeah, absolutely. A lot of trends we're seeing in this earnings season. You have eBay touting its advertising portfolio, its expanded advertising portfolio. We've been talking about it all week with the big tech giants, working on promoted listings. Again, they're down a little bit in aftermarket. They were a little light on some metrics, though, beating on net revenue. To Caroline's point, priced in. But, you know, we'll see how this continues on tomorrow. It is a risk-off day.
This is a company, remember, that's also doing pretty well on trading of, well, whether or not it wants to get into crypto, but certainly trading cards, you know, the way that all collectible items, they've been doing well in sneakers, in cards. They introduced price guide and collection for trading cards, new features designed to provide, well, those enthusiasts that they really want to lock in, being able to track the value of their card portfolios. Apparently, they've got, to date, close to 4 million cards have been purchased on and off eBay that they've seen in terms of customer collection. So this is a real area of growth for them. So too is some of the technology that you were just saying, authenticity being a key part of that, also managing payments and managing their advertising.
Yeah, you know, a smaller sort of tech company that we've been following is Twilio. The horse race of earnings comes out, but we do want to bring you a change at the top of management. The COO, Chief Operating Officer, George Hu, is set to resign. They have named a new COO, Chip Handler, Cosima Chip Chandler, will be the new COO as we take a look again at what looks like an improvement on the third quarter earnings, an improvement on the forward guidance with fourth quarter earnings as we see sort of the big tech beat and a raise trickle down into smaller tech.
All right, so we've got that stock, Twilio, up almost 4%. We've got eBay down about 3.6%, and Ford rallying up about 5%. I'm going through the press release. Here's some more of the headlines. The company saying semiconductor availability remains a challenge, talking about maybe concerns, external ambiguities for 2022 could include the interplay between semiconductor-related constraints in vehicle volumes and pricing, which are expected to remain dynamic, likely inflationary effects on direct and indirect costs, including for materials and freight. For example, commodity costs are expected to be up $3 billion to $3.5 billion for the full year 2021, could increase another $1.5 billion in 2022, Tim.
Hey, I wonder if analysts and investors will ask any questions about the big Hertz Tesla news that we got earlier this week. Are they going to be saying, hey, what are you doing at Ford to make sure that you're continuing to provide fleets for rental car companies when Tesla really reached a more than $1 trillion valuation on that news earlier this week, Caroline?
And just thinking, of course, who's at the helm of Hertz right now, interim CEO, but Mark Fields used to be over there at Ford, and I'm sure he'd probably want to maybe take a bit more business towards his old employer. But at the moment, we do have some key winners and laggards. We're going to be digging in much more to the Ford story. eBay currently sliding some 4% after the sales forecast did lag some estimates, guys.
Yep, eBay down. We've got Twilio down a little bit, and we've got Ford definitely rallying big time in the after hours. That's going to do it for our comprehensive market coverage, our cross-platform coverage on radio, TV, and on YouTube. We'll catch you again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Wow, that Ford is a big beat. Or at least investors loving what they had, especially as you consider we closed on a downward leg for the equity markets, but it's up 5.5% here.
The company saying in a release that high demand for must-have new products, including battery electric vehicles, earnings power in North America, and improvement in other regions, further investments in connected BEV leadership highlighted the first anniversary of the Ford Plus plan for growth and value creation.
Even so, resuming its regular stock dividend in the fourth quarter, that's upbeat, and also boosting its year outlook. This is what investors want to know. What are you seeing for the outlook? And when you raise raise your outlook, you certainly get rewarded. And this is a stock, as I said, that's up 80% so far this year, and now we're up another 5.7% in the after hours.
Let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by in the 99.1 newsroom there. Hey, Nancy.
Hi, Tim. It's coming down to the wire on the president's deadline to get a deal negotiated on his human infrastructure agenda before he leaves for Europe tomorrow. The plan would fund things like paid family leave, expanded health care, and efforts to combat climate change. White House Press Secretary Jen Psaki says world leaders will not question U.S. credibility just because a deal is not 100% finalized.
They're seeing we're making progress. They're sophisticated. They're seeing we're on the verge of getting to a deal, and that's not, they don't look at it through the prism of whether there is a vote in one body of the legislative body before he gets on an airplane.
Psaki says the president could make a trip to Capitol Hill to see if he can break this stalemate. One proposal that had been floated by Senate Democrats to place a tax on billionaires has been taken out of the proposal. Instead, lawmakers are discussing a 3% surtax on top of the top income tax rate for those earning over $10 million. Santa Fe County Sheriff's investigators continue looking into the shooting on a movie set starring Alec Baldwin. The accidental shooting resulted in the death of cinematographer Helena Hutchins and injured the movie's director. District Attorney Mary Carmack Altwies responded to the possibility of charges still being filed.
If the facts and evidence and law support charges, then I will initiate prosecution at that time.
Carmack Altwies says they cannot say with certainty negligence was involved. Officers have interviewed Baldwin, the person in charge of the weapons on the set, as well as the assistant director. The three are reportedly the main individuals connected to the shooting. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Let's check in with Charlie Pellet for a check of the latest business news. Hey, Charlie.
Well, hello there, Tim. Keeping an eye on eBay shares. Investors bidding that stock lower right now, down 7% after hours. eBay reported adjusted EPS from continuing operations for the third quarter that did beat the average analyst estimate. Again, eBay right now bouncing around, but down 6.5%. The other stock you guys have been following, Ford, it is raising its full year 2021 guidance. Ford announcing a resumption of a stock dividend in the fourth quarter, and Ford shares driving higher after hours. Ford up now by just about 5%. A lot of selling in that final 30 minutes of trading. The Dow and the S&P both ended the session with losses, ended the day at the lows of the session. NASDAQ eked out a gain, up by less than half a point. Little changed on NASDAQ. NASDAQ 100 index held on to its gains, was trading at a record up today by just about 0.3%. Some of the high-flying tech names after earnings today included Microsoft after earnings up 4.2%, Alphabet after earnings up by 4.8%. 10-year yield 1.53%, spot gold up 0.3%, $17.97 the ounce. West Texas Intermediate crude down 3%, 82.08 a barrel. Bottom line here, stocks did fall from record. Shares of small companies leading the declines today. We did have the Russell 2000 dropping today by 1.9%. And this update is brought to you by Withum. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit Withum.com for more. Recapping late day selling, S&P ending the session lows of the day down 23, down 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So over the summer, you might recall that President Biden urged a group of chief executive officers to help improve cybersecurity across the nation's critical infrastructure and economy. He cited, Tim, a lack of trained professionals to adequately protect the U.S. He is really concerned about the skilled cybersecurity workforce not growing fast enough to keep up the pace.
He's not the only one who's concerned. 72% of Deloitte's Global 2021 Future of Cyber Survey respondents indicated their organizations experienced between 1 and 10 cyber incidents and breaches in the last year alone. Let's get into it with Emily Mossberg, global cyber leader at Deloitte, joining us on the phone from London. Emily, it seems like each and every week we are talking about a new cyber incident. The question, what can companies do in order to keep their organizations safe?
Well, there's a number of things when you think about, the cyber landscape and how to proactively secure your organizations. But I think that one of the biggest focuses is the fact that it's about preparedness, and it's about preparedness for when a cyber event happens. Because in the broad scheme of things, with all that we need to protect in terms of the breadth of an organization's environment, all it takes is one hole for the bad guys to get in. And as we've seen in the media time and time again, that continues to happen. So it's not just about prevention, which is important. It's also being ready to respond when an incident does happen.
All right, so this is not a new topic, right? You know it as much as the rest of us do. We've been talking about this for years, the concerns around cybersecurity. I think about years ago, too, Jamie Dimon doing an event, and they were like, what are you worried about cybersecurity? So it is front and center. Emily, what's different, though, about cybersecurity today versus maybe 5 years ago? What is it different, and what does it mean in terms of the differences to protect ourselves?
I think one of the biggest things that we're seeing with the transformation that we're undergoing is the fact that it is shifting from just being an enterprise IT issue focused on protecting your own applications and systems to focusing on the operational technology that you need to protect. So if you think about things like connected vehicles, connected medical devices, any number of things in your home that are connected, it's now moving into the broader landscape and the physical environment around us as well. So it's not just about protecting, applications, servers, and data within an organization. It's pervasive.
Because it's so pervasive, companies are spending a lot of money on it. According to your survey, almost 75% of respondents who had more than $30 billion in revenue said they're going to spend more than $100 million on cybersecurity this year. Emily, who are the winners here?
Well, I don't know if there are any winners.
Well, the cybersecurity companies.
Well, there's a lot of money being spent.
Yeah.
But the bottom line is that there's also a shortage. And I think that if you think about all the concerns that are being raised, there's a shortage of workforce to focus on this. And one of the things that we need to do is we need to shift the way that we're thinking about cybersecurity. It's often viewed as a protection that needs to be in place after the fact. We need to start thinking about, as we're innovating, as we're developing new products and services, as we're developing new business models, how do we embed cyber into the beginning of those innovations, the beginning of those products, because that's when you win.
Well, that's an interesting.
When you build it in.
That's interesting. So from the get-go, right, when something's on the assembly line, I'm being really basic, but that's what you're saying, right? From the get-go, it's got to be part of the system.
Yeah, and I would even say before it's on the assembly line, when new products and services are being contemplated and innovated at the very beginning of the product management lifecycle, you have to think about the risks that are being brought as you're innovating in that new technology.
Well, aren't they being done that way? You would think that in this environment that's the case, but is that not the case?
We're moving in that direction, absolutely. Okay. But the adoption isn't where it needs to be yet. And we're at a place where it's recognized, but not completely understood in terms of what that means. What's interesting, though, is you are seeing cyber being considered by a much broader set of stakeholders. So, for instance, when we did our survey, we interviewed chief marketing officers. And the chief marketing officers, in 88% of the instances, were part of simulations associated with incident response and wargaming on an annual basis. We've never seen stats like that in terms of having a broader set of stakeholders at the table. So it is changing for sure.
One thing we're hearing more and more about when it comes to cybersecurity, Emily, is the idea of zero trust, the concept of zero trust. For people who aren't familiar with it, explain what it is.
It basically means that you don't trust anything, no matter where a transaction is coming from or a connection is coming from, whether it's in your environment or within your organization, you don't trust it, which means you have multiple layers of security within your organization, at the application layer, at the system layer, at the data layer, so that you are not trusting any connection.
So, Emily, I'm thinking about, you must have a massive amount of clients, and they're probably all household names, publicly held companies we all know of. So what is it they come to you, and they're like, listen, we know about the cybersecurity concerns. We've all been worried for years. what are the things that I don't know, or what is it that, you know what I'm saying? Like, I feel like this is a topic we all talk about pretty regularly. Tell me something that might surprise me.
I think that they come to us when they're trying to figure out how to make that cultural shift. It's how to really drive the transformation. Because it's one thing to talk about the issue. It's one thing to understand that it's there. It's another thing to completely change your organization to one that's cyber aware and focused on cyber resilience. And I think that that's where we really, I would say it's really surprising in terms of how we engage with clients.
So financial companies, they're pretty smart about this, but maybe who isn't?
Well, if you think about industries, those that are highly regulated are definitely farther ahead and more mature.
Okay.
But smaller organizations that are in newer industries haven't necessarily spent the amount of time to mature their programs.
It's so interesting that, Emily, that you bring up regulation, and I'm wondering how policymakers should respond. Carol started our interview by citing what President Biden and the White House have said about this. What should policymakers be doing?
I think the bottom line is we really have to drive to a much more collaborative approach in this. It's not about any one company. It's not about any one industry. It's about how we can share information, whether that's intelligence sharing in terms of threats, how we can share information about zero-day vulnerabilities, and how we can work together as a society to combat the adversary.
Yeah, I do think about our audience too, that like kind of what they should be asking themselves, because it is certainly a topic we talk about a lot. I think about, we do a summit down at the 9/11 summit that looks at security in total. So what do you think the investment audience needs to be asking themselves when it comes to this?
You really need to ask, what steps have organizations actually taken? I think part of what we've talked about today is the fact that there's one thing to have awareness. It's another thing to actually make change. So how are you sure that the culture itself is changing? One piece of advice that I give boards is, it's great to have your chief information security officer come in on a quarterly basis and give an update on their priorities. But as you're listening to your business leaders talk about their initiatives, how are they talking about cyber as it relates to those new innovations and the new technologies that they're looking to bring? When you hear about cyber outside of the chief information security officer, you know that you've driven the change that you need.
Important point, and certainly something to take away from this. Emily, thank you. Emily Mossberg, she's Global Cyber Leader at Deloitte, on the phone from London. They are just out with their Future of Cyber report. It is something we talk about a lot. And I think that whole idea of innovation, or when you're creating something, it's got to be part intrinsically, right, from the get-go.
We talk about it a lot, but I think a lot of people only talk about it when there's a big issue. Colonial Pipeline, hack, a breach of the MTA or the ferry system.
I know. I was just talking with somebody, just one of our colleagues, and just saying, sometimes I'm terrified. We don't carry money anymore. Like, what happens if there's some bug, and the systems get shut down?
You're
then
scaring
what?
me now.
Sorry to freak everybody out on this Wednesday. Thursday, I won't freak you out. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio, the making of a vaccine. That's coming up.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we had a couple good segments still to come before we wrap up on this Wednesday. Yes.
I want to talk about your panel from earlier this morning.
It was pretty heated. It was the agitators. Not heated, but it's three individuals who are really looking to kind of upend ESG and make them more accountable, and saying that right now what we're seeing in terms of all of the money going to ESG, nonsense.
We're also going to hear from Greg Zuckerman on his book, A Shot to Save the World, the inside story of the life or death race for a COVID-19 vaccine.
Never nonsense?
Charlie Pellet, here he is with the latest.
And we got a big injection of earnings after the closing bell here with the Dow, with Ford up now by 1.3% after hours. Ford charging forward with big investments in electric vehicles, reporting third quarter results that beat analysts' expectations. Also out after the closing bell, eBay. It delivered a revenue forecast for the current quarter that missed estimates, worrying investors about the upcoming holiday shopping season. Investors bidding that stock lower now. We've got eBay down by 5.1%. Late day fade with the Dow, the S&P both closing at session lows. NASDAQ holding on to a gain of less than half a point today. We did see the NASDAQ 100 index at a record before fading. S&P down 23, a drop of 0.5%. The Dow down 266, down 0.7. 10-year yield 1.53%. As for the mood of the market, Barry James is president and portfolio manager at James Investment Research. He was our guest right here on Bloomberg Business Week.
I think we have this transition from the tech area, from the growth area, from the large cap into the cyclical value and smaller types of stocks, and that's where I would be focusing today.
Well, today we did see the Russell 2000 tumble by 1.9%. Gold up 0.2, $17.97 the ounce. West Texas Intermediate crude down 3%, $82.09 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, today at the Bloomberg Equality Summit, I got to talk about the agitators who are putting ESG in the spotlight. On that panel, Tariq Fancy, former Chief Investment Officer for Sustainable Investing at BlackRock, Laura Murphy, pioneer of the corporate civil rights audit, and Barbara Ann Bernard, founder and CIO of Windcrest Capital. Here's a little snippet of the interview. It starts with Tariq voicing his skepticism on ESG.
The answer to climate change is clearly, Nobel Prize winning economists are telling us it has to be policy reform. It starts with a price on carbon that is a systemic reform that, addresses a systemic problem. That has to be government action. And I think that the economic system is being so seized by a set of narratives that have underlie the system and are almost invisible, that emerged in the 80s that tell us that free markets solve all problems, that even when faced with market failures, 13 years after the financial crisis, we're still sort of hitching our ride to a set of solutions that don't really work. And the problem is the asset management industry is incentivized today. No one wants taxes and regulation, even if that's clearly the solution, right? And climate change is going to cost money. Someone's going to have to pay. And so faced with that reality, there's an incentive to sort of take one hand and hold off taxes and regulation with a set of narratives that say that business will solve these problems all by themselves, kind of like a sports game where, the athletes say, oh, we don't need referees, we'll self-referee, and good sportsmanship's the answer. And then into the growing social angst that starts to develop because people see nothing getting done on these major problems, then there's an incentive to sell a bunch of products that, for the most part, have no empirical evidence at all that they create any kind of impact or lower emissions, but are lucrative, particularly for financial, for asset managers who are facing fee pressure for, largely increasingly commoditized products.
Barbara, I want you to come in on this because over the summer we did see the European market for sustainable investing contracted by $2 trillion. There was kind of a rethink, right, because of the introduction of anti-greenwashing rules. So does that tell you that maybe we're getting smarter about ESG, or do you still think a lot of the ESG that's out there is nonsense?
I think ESG needs to be disrupted. I believe in ESG 2.0. And ESG 2.0 is about materiality and authenticity. And that's the portfolio that sits at the intersection of profit and purpose. So I believe in a lot of what Derek said, but I'm not as jaded. I'm hopeful. And so I think ESG 1.0 was either investing in naturally low carbon tech companies or the index hugging just slightly overweight tech, slightly underweight energy. And that is nonsense. And that is greenwashing. And when you talk about those big numbers in ESG, the problem is 70% of ESG money is passively invested. So we will not have an energy transition unless we have an investor transition. And so the reason Engine 1.0 was so popular, or Engine number 1 was so popular, I think, was it enabled these large passive asset managers to tick an ESG box without changing their passive investment strategy. So I'd say we've gone from passive to passive aggressive. And if I look at that strategy, even if they get everything they want, what are they doing? Accelerating the demise of Exxon? Like, I'm not sure that's the answer either. I think ESG 2.0 is active management, because I think you get what you inspect, not what you expect.
Laura, come on in, because I think you have created a new format for companies to really take an inward look at how they are doing things, how they sell products, how they do services. You're not maybe directly involved in ESG investing, but you're changing the proxy seasons. There are, issues being brought up that were never brought up before when it comes to the practices at companies. Talk to us about what we're doing. Do you really think something's happening, that they are looking much more inward when it comes to their biases and how they approach customers and clients and how they do things?
We don't want greenwashing type activities in the civil rights spaces. Over 500 corporations said something after the murder of George Floyd, and there were a lot of good statements, and there were charitable contributions, and there were a few good programs, but companies need to go deeper. And so I've outlined what I think is a set of baseline practices for companies to use if they are serious about ending discrimination within their own walls. And it goes further than diversity, equity, and inclusion. I mean, we're asking questions like, we want companies to ask questions like, are my products hurting communities? Do people with disabilities have access to our platform? Are we locating toxic waste plants in minority communities only? Is our facial recognition software working on people with darker skin? And how do we address those practices and make companies more equitable so that they stop hurting people? People don't want all of these platitudes, just like you have in the ESG space, that we're a green company and we're anti-racist company. The time for the platitudes is over. It's now time for companies to get down to the serious business of self-examination. And this is what the civil rights stakeholders and worker rights stakeholders are calling for.
That's the voice of Laura Murphy, pioneer of the corporate civil rights audit. She was there along with Barbara Ann Bernard of Windcrest Capital and Tariq Fancy, former chief investment officer for sustainable investing at BlackRock. Check out more at BloombergLive.com. A couple of headlines real quickly. Ford saying the chip shortage could extend into 2023, and Starbucks to boost the pay for its hourly partners of 2+ years, says the pay increases to go into effect next summer. Average hourly pay to nearly $17 from the current $14.
Let's head now to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Thanks, Tim. The White House is stepping up pressure on congressional Democrats to finalize at least the framework for a deal. So President Biden's economic agenda will have something done before he leaves tomorrow for a series of meetings in Europe. A proposed tax on billionaires outlined earlier today has already been eliminated from the plan, according to Congressman Richard Neal, while a surtax on millionaires is under consideration. Congressional Democrats are urging party leaders to end the Senate filibuster and pass the John Lewis Voting Rights Act. Congressman Lloyd Doggett of Texas says they need the White House to step in.
We need the president to fully engage with those senators who've been resisting making an exception. We have to make an exception for the future of democracy.
Doggett says Republicans are afraid if restrictions are not placed on voting, then they will lose. The John Lewis Voting Rights Act would force states like Texas to get pre-clearance for any changes made to voting. Investigators say there was some complacency in how weapons were handled on a movie set where Alec Baldwin accidentally shot and killed a cinematographer and wounded the director. Sheriff Don Mendoza says ammunition rounds found on the set included a mix of blanks, dummy rounds, and possibly even live rounds.
This investigation is active, so I won't comment on how they got there, but we suspect that they are there. That will be it will be determined when testing is done by the crime lab in reference to whether or not they are officially live rounds or not.
Mendoza says criminal charges have not been filed, but that they are not out of the question. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. Just want to mention some headlines crossing, just rehashing them. First of all, we got Ford coming out saying the chip shortage could extend into 2023. Does see the chip shortage, though, starting to ease next year, but nonetheless could extend into 2023. This is after the company boosted, though, its year outlook.
The company in a press release also touting its newest products. It's been a year since the platform Ford Plus was announced. Ford saying that it sees 200,000 a year in global demand for the electric Mustang E. I saw one on the road.
You liked it?
It was cool looking.
There's a couple of stories that, but really two main stories when it comes to the auto manufacturers. We saw it with GM. It's certainly their access to chips. That's been certainly a constraint for them, although Tesla seemed to manage it just fine. And then the other story is increasingly that pivot into electric vehicles.
And just to put that 200,000 number in context, remember it was Monday that Eric Schatzker here at Bloomberg reported that Hertz will be buying 100,000 Teslas from Tesla over the next 14 months, which is 1/10 of what Tesla produces a year.
So you do wonder, those rental car companies, who else might they be tapping when it comes to EVs? Ford, by the way, they did boost their year outlook, and they did talk a little bit about commodity costs, up $3 billion to $3.5 billion in 2021. That's this year, and $1.5 billion in 2022. Stock still is up 3.9% in the after hours. The other story we wanted to just reiterate for you, Starbucks, to boost pay for its hourly partners of 2+ years, says pay increases to go into effect next summer. And Tim, they're going to lift average hourly pay to nearly $17 an hour from the current $14.
Okay, so that's average. So if we remember back to our grade school arithmetic, that means it's going to rise to a range of between $15 and $23 across the country. So depending on where somebody lives, that's how much money they could make per hour.
This is a company that if they don't have the workers and you don't really want to see turnover, but if you can't hold on to them, you're not going to be able to serve your customers, and that will certainly impact your top and bottom line. So
we're going to hear from more companies doing this.
Yeah,
we talked to Chipotle's CEO last week.
Right. We're going to feature that interview in our weekend show as well. Right now, there's shares of Starbucks not moving in the after hours. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on Ford shares after earnings, after hours. Ford up now by 1.4%. It's moving forward with big investments in electric vehicles, and it reported third quarter results that beat analyst expectations as chip shortages eased and sales grew. Also reporting after the bell, eBay. It delivered a revenue forecast for the current period that missed estimates. That is worrying investors about the upcoming holiday shopping season. Right now, eBay is down by 5.1%. Mixed day on Wall Street. The key takeaway, late day fade. Stocks really dropped off in the final 15 minutes or so, with the S&P ending the day at session lows, down 23 points, down 0.5%. The Dow Jones Industrial Average dropped 266 points, down 0.7%. NASDAQ managed to hold on to a gain, barely up by less than half a point. 10-year yield 1.55%. Today's spot gold up 0.2%, $17.96 the ounce. West Texas Intermediate crude down 3.1%, down $2.60 a barrel, 82.06. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We talk so much about how the COVID-19 pandemic has given us all a very close-up and fairly transparent view of what it takes to create a vaccine. And there's a new book out that chronicles the epic scientific sprint to create COVID-19 vaccines and really focusing, Tim, on what went right.
Greg Zuckerman is a writer at the Wall Street Journal, also the author of A Shot to Save the World, the inside story of the life or death race for a COVID-19 vaccine. He joins us now on the phone from New York City. Greg, it's great to have you with us this afternoon.
I feel like a colleague because we had a little bit of overlap at Dow Jones because I was there from about 93 to I think about 98. So just a little bit of overlap.
Did you guys hang out?
Well, I was going to say, guys, that it's a pleasure to be here because you're my companions each afternoon. Ever since the pandemic, I listen to you guys all day long. So I'm a big fan and a pleasure to be with you.
Well, it's so great to have you here. So tell us about this book because I think we all focus on the bad and how crazy the pandemic and the whole process of getting a vaccine, but it is pretty remarkable, this whole process. Tell us what you set out to do.
Sure. So we've all read about what went wrong. My book is about what went right. I think we're a little too close, I think, right now to appreciate what a miracle these vaccines are, how modern science really, this is the greatest achievement of modern science, even modern finance, you could argue. To produce a vaccine so quickly, so effectively is remarkable. And what I do in my book is I go back in history and I trace the drama and the twists and turns and what took us to get these achievements. And frankly, it was kind of surprising along the way how close we were, frankly, to not having these vaccines. Even as recently as May 2020, Moderna just didn't have enough money, and there were all kinds of obstacles in the way of BioNTech and Pfizer, too, that I wasn't really aware of.
Well, let's talk a little bit about those, because if we think about mRNA technology, nowadays, like lay people are talking about this technology, but we hadn't heard of it before a little over a year ago, I think it's fair to say, if you weren't closely following the biotech space. So how were Pfizer and BioNTech and Moderna sort of developing this technology, experimenting with this technology at the same time?
Well, what's fascinating is that mRNA, which is a molecule, and we all have it, it transports the DNA to the cell, part of the cell where it makes proteins. And scientists have always said, well, what if we could create mRNA in the lab? It could make us produce any kind of protein we wanted, which are key for vaccines, for drugs, anything. And so it was always this kind of holy grail. But everybody always said the conventional wisdom, the consensus among scientists was, yeah, you don't mess around too much with mRNA. It doesn't last very long. It can't get all the way into the cell. Don't waste your time. And it took some upstarts, some outsiders, I would argue, to focus on it. That's BioNTech. That's Ugur Sahin, the CEO, and his team at BioNTech, this German company, and Moderna, which frankly, going into 2020, there was all kinds of skepticism and even worse, accusations maybe they were exaggerating their capabilities. They were plugging away, and I write in the book about all the behind the scenes, really breakthroughs, small breakthroughs along the way that they were proud of, but everybody else is very skeptical.
Greg, one thing for sure, the writing about Stefan Bancel of Moderna and kind of behind the scenes what was going on, I mean, he sounded like a pretty tough boss.
Yes, he's Steve Jobs-like in that he's got a vision and he's a genius in some ways, but he's also can be difficult. And historically, going back years, people had more difficulty. Today, he's got more of a loyal team and they can handle his personality. But in his defense, he had a vision. He thought he had a miraculous approach to create vaccines and therapeutics. And he was very insistent on pushing his people to get there. But yeah, along the way, it was difficult. I write all about people collapsing at the office, inside the office, outside the office, being pushed so hard. He was a little blunt, shall I say. A lot of the characters, one thing that kind of struck me in the book is how many characters there are in the world of science. And they're very envious, competitive, driven. They're fascinating.
This is so much, it's such a fun read. You say he was blunt. I'm just going to read one line where he said, this is a stupid idea, he told one staffer who had disappointed him. But visionaries, right? I mean, I'm not excusing it, but you often hear this of people who have created some incredible designs, products, services, right? This is kind of how they are.
Yeah.
Not excusing it.
They're driven and they believe, and you kind of have to. So when it comes to mRNA and some of the other approaches I write about too, behind the J&J vaccine, behind other approaches, experts said they were idiots. They were wrong. There's no way they should be wasting all the time and energy and resources. And it takes a sort of a self-confidence to ignore the conventional wisdom.
So, Greg, what happens next when we look back in the history of mRNA technology and the sprint, what you call the life or death race for a COVID-19 vaccine? Is this an inflection point? Is it a turning point? Do we look back at mRNA technology as being something that really helped us so far beyond COVID?
So listen, I'm a journalist, so I'm inherently a little bit skeptical. Maybe even some could say cynical. But that said, I'm optimistic about the future and about the ability to use mRNA and some of the other techniques that they've honed and they've applied to COVID-19. Now there is high hope that we can maybe apply it to cancer, maybe other things too. I mean, we've been able to turn on the immune system when it comes to COVID-19. Maybe we can turn it off and address some things like MS and some other kinds of issues with the immune system. So I believe there's going to be an all-in-one shot in the next couple years where you can have all the coronaviruses and flu, just go in once, maybe a year, and take care of that. Malaria is another one where they're focusing on. I'm really excited about the future. I'm hesitant to be confident about it, but I'm optimistic.
Hey, Greg, just got about a minute left here. There's so much detail and specificity in your story. The reporting is just top-notch. What's just quickly one thing that you learned was revealed and you were just like, oh, my God?
Well, I was shocked that Moderna almost ran out of money in May 2020. There was a very good chance that they wouldn't have been able to make any of these vaccines. And frankly, Operation Warp Speed was really helpful, but Wall Street played a much bigger role than I'd expected, stepping up. And frankly, Pfizer was hesitant to get involved with COVID-19. Now they're the heroes. They've saved thousands, maybe hundreds of thousands of lives. But as I write in the book, it took some convincing from Ugur Sahin and some others for them to get involved. So there's a lot that was eye-opening, at least to me.
Hey, just FYI, you know this well. Moderna now a $137 billion market cap company. It's up 226% this year.
And Ben Sell among the wealthiest people in the world as a result.
Unbelievable. Greg, this is incredible. Thank you so much. Come back anytime. Really, really fun. Greg Zuckerman, writer at the Wall Street Journal, long time at the Journal. As I said, there's a couple of years overlap when I was there with the TV group there. And his book is A Shot to Save the World, the inside story of the life or death race for a COVID-19 vaccine. Just unbelievable amount of information there.
Well, let's head now to Washington, D.C. Joe Matthew is standing by for a preview of what we have coming up on Sound On. Hey, Joe.
Hey, so is it in or is it out? The billionaire's tax. Looks like it's now. It's now they're saying it's out, but it's hard to get a straight answer. Can you imagine 700 people paying?
All right.
On Sound On.
All right, everybody. This is Bloomberg Radio.